This is Boom Bust, broadcasting around the world and covering all aspects of our 21st century global economy. I'm Daniel Brito in Washington. Christy I is on assignment. Today's show is just brimming with hot content, and we start here in the United States, where the Federal Reserve has cut interest rates yet again as demanded by President Trump. But what will this move mean for markets? Richard Wolff, the prescient professor, is on hand today to break down the future of the Fed. Plus, Amazon's algorithm is under a harsh spotlight today as recent reports allege the company's search tool favors the company's own products. Author and tech executive Alex Salkever joins the show today to give us insight into what the e-commerce giant has been up to and what legal challenges they could be facing soon. We digest a world of global business news to bring you the best market-moving information. Let's go. Another cut in U.S. interest rates leads our global report today as the Federal Reserve unveils an expected quarter-point interest rate cut, the second of 2019. After 2 days of policy meetings, the Federal Open Market Committee of the U.S. Central Bank said it would lower the target rate for the benchmark federal funds rate to between 1.75% and 2%. In a policy statement, the Fed committee referenced, quote, the implications of global developments for the economic outlook as well as muted inflation pressures as reasons for the cut. 7 of the 10 members of the FOMC voted for the new policy. While the Fed was meeting, it has been an interesting week for the overnight funding market as interest rates temporarily rose as high as 10% for some transactions on Monday and Tuesday. The uncommon rate jumps caused the U.S. Central Bank to rein them in, stabilizing markets by Wednesday morning. And while the U.S. Central Bank makes their latest policy moves, their counterpart in the European Union is marking an official leadership transition. On Tuesday, Christine Lagarde officially became the new president of the European Central Bank and the former managing director of the International Monetary Fund, with 394 votes to confirm her in the European Parliament. 206 members of the European Parliament voted against Ms. Lagarde and 49 abstained from the vote. Reuters reports that in Ms. Lagarde's latest financial policy-making position, she will likely have to decide on whether and how the ECB takes on a new investigatory role in a years-long cascade of scandals at Deutsche Bank. Reuters reported that ECB staff are considering opening a formal investigation of Deutsche Bank for alleged unauthorized purchases of their own securities, specifically bonds classified as AT1 and AT2. Joining us now to once again orient us to the global economic events of the day is Richard Wolff, Professor Emeritus of Economics at the famed UMass Amherst and the author of Democracy at Work, A Cure for Capitalism. Richard Wolff. Professor Wolff, there's so much to get to here since we saw you last, but first, let's go with the U.S. Central Bank, the Federal Reserve, which, as expected, lowered the target range on the key federal funds rate by 25 basis points. Wall Street seems to be giving another thumbs down on the rate cut. So looking at this, let's go to Jay Powell explaining the Fed's choices. They're cutting rates to boost the economy, but here's what Jay Powell said recently about the state of the U.S. economy.
So we're not forecasting or expecting a recession. As I mentioned, incoming data for the United States suggests that the most likely outlook for the United States economy is still moderate growth, a strong labor market, and inflation continuing to move back up. I went through the numbers. So the consumer's in good shape, and really our main expectation is not at all that there'll be a recession.
And we've identified this disconnect before, but Mr. Powell says there's no expectation of a recession, so then why the rate cuts? We've been over this contradiction before, but it's becoming quite glaring, and I have to wonder how much longer can Mr. Powell try to square his takes with the Fed's actions?
Well, here's my suspicion of what's going on. Mr. Powell and the Fed are under incredible pressure from President Trump. He is desperate, and he's desperate for a simple reason. If the expected recession, and let me underscore that, the recession is expected. Our capitalist economic system for 200 years, wherever it has settled in, has had an economic downturn on average every 4 to 7 years. From the last downturn in the United States, it's now 9 or 10 years. Therefore, we're due, and everyone who pays attention knows it. If the recession hits, over the next 6 to 12 months, Mr. Trump can kiss his reelection effort goodbye. It's over, and he knows it. So he wants the Federal Reserve to cut interest rates drastically, which is why he was angry at Mr. Powell today for doing it only a quarter point. The reason Mr. Powell said recently that we're not facing a recession is that's as much as he's willing to do for Mr. Trump, to join Mr. Trump in saying something that is patently untrue, namely that we have no recession to fear. We do. Not only is it the normal pattern of our economy, the type we have and has been for 200 years, but we have the added problem, economic war with China, drone attack in Saudi Arabia that revs up the risk of war between the United States and Iran, the collapse of the negotiations between Britain and Europe around the Brexit question, and a decline in economic growth in both China and Europe. Those are more than enough complicating factors to make any reasonable economist very worried about recession. Mr. Powell's statements are to mollify a president squeezing for much greater cuts than Mr. Powell is ready to do, and so we sit there with this contradiction as you rightly describe it.
Right. It seems like Mr. Powell is performing for an audience of one, and that one audience member is still not happy with this quarter rate cut. But we noted some important context for this action. The federal funds target rate cut lands after 2 days of irregularity in the overnight funding market that reportedly required perhaps $50 billion or $75 billion of unusual Fed intervention. We got Peter Schiff's take on this anomalous phenomenon yesterday, but give us your take. What's been happening with the overnight financing rate, and what does this anomaly mean?
This is a very serious matter. Starting on Monday, and then again yesterday, and again this morning, the Federal Reserve has now pumped in, listen to this, $123 billion. 53 the first, 70 or roughly 70 billion the second. This is serious. This is a breakdown in a credit market. It's a short-term credit market, overnight borrowing and lending, but that is a crucial part of the financial system of this country and of the world, and has been for a long time. To see a sudden move in interest rates from roughly 2.2% to as high as 10% in the course of a day and a half tells you something is wrong. The normal planning hasn't happened. The normal liquidity that the different players need to have isn't available. So the Federal Reserve has to come in and once again bail out the financial system. All the authorities keep telling us is, oh, it's a glitch, it's a technical issue, nothing to worry about. That makes me even more frightened, because that's the kind of thing they told us late in 2007 and 2008, and we all know what happened after that. We need much more explanation than we've been given for what this problem is, and much more concern at the highest levels of figuring this out before we are going to be in a deep recession again, wondering why we didn't pay attention to the signs, and in retrospect, were always there.
Right. And back to Mr. Powell's prognosis on the U.S. economy. He may not see a recession in the near future, but as you alluded to, many people do, and apparently that includes a majority of 225 corporate CFOs. 53% of them, polled by Duke University, said they expect a recession in the U.S. within a year. 67% see it starting before the end of 2020, so soon enough to interfere with the election. Is Mr. Powell in danger of developing a crisis of personal credibility and systemic business confidence based on his prognostication on the economy, and also his reasoning for why the Fed is doing what it's doing when it seems to be clearly not credible?
Yeah, I do want to say, even though I find myself ironic about this, Mr. Powell is under extraordinary pressure. He knows that there's a recession coming. He knows on some level that he has to deal with it. On the other hand, he doesn't want to be seen as the patsy doing what Mr. Trump is doing, helping him to get reelected, since he, like Mr. Dudley, who said it publicly, knows that Mr. Trump is a big fat problem for the American economy. Let me point out, that in addition to those CFOs you mentioned, some of the most important industrial association, the American Grocers Association, the American Retail Association, publicly yesterday and today excoriated Mr. Trump for the global trade war on China, which they say is threatening their business, hurting their profits, and in that way contributing again to the recession that we all know is coming. Mr. Trump is trying to hold it back and putting Mr. Powell in an impossible position, so he waffles, which Mr. Powell may be criticized for doing. But wow, is he under conflicting pressures in terms of wanting to maintain the credibility, wanting to do what's right, not wanting to appear to be Mr. Trump's willing tool. This is a very difficult position for him and reflects the gap between what's actually going on in the American economy and what the president and people around him keep telling us because they want us to vote for them next fall.
And we noted also Christine Lagarde today formally taking charge at the European Central Bank, while the question of investigating Deutsche Bank for monopolistic self-dealing is working its way through the ECB bureaucracy. Quickly, do you have any insight or expectation about how that process might play out under Ms. Lagarde's leadership?
Well, she's been a very pliant and conservative friend of the banking system. If she goes after Deutsche Bank, it will be for one of two reasons. Either the behavior of Deutsche Bank is so much worse than what other banks are doing that it has to be done because of the risk of what it'll look like if that bank folds, which some people think it will, and she will have not done something about it. On the other hand, she has to be very careful, because if she goes after Deutsche Bank for a whole list of misbehaviors, you have to understand that many other banks do those things also. And then the question will be raised by her subordinates, if not by her. If we're going after the bad guy, what about all the others waiting in the wings? How do we justify not going after them? And at this point in a fragile global financial system, a major exposure of misbehavior by banks could be the famous straw that breaks the bank or the back of our economic system.
Fascinating dilemma. Professor Richard Wolff, thanks as always for your time.
Thank you.
And in international sanctions news, the President of the United States claims that he has tightened the screws once again on Iran. The U.S. President, who earlier this week suggested he was waiting for directions from Saudi Arabia on how to respond to suspected drone attacks on major oil facilities, tweeted that he has directed Treasury Secretary Steven Mnuchin to, quote, substantially increase U.S. sanctions on Iran, though President Trump cited no specifics. White House officials declined to clarify what, if any, specific measures have been approved. Experts suggest there may not be much space left for tightening the current punishing U.S. economic pressure methods being deployed against Iran. The president notably did not cite in his tweets the recent attacks on Saudi oil facilities, which his administration have tried to blame on Iran. Time now for a quick break, but stay tuned because when we return, Amazon's algorithm is under the spotlight today as recent reports allege this company's search engine favors their own products. Author and tech executive Alex Salkever joins the show today to give us insight into what the e-commerce giant has been up to and what could happen in the coming months. And as we go to break, here are those closing market numbers.
In a world of fake partisan news, lies, and conspiracy, it's time to wake up, to dig deeper, to hit the stories that mainstream media refuses to tell. More than ever, we need to be smarter. We need to stop slamming the door on the facts and shouting past each other. It's time for critical thinking. It's time to fight for the middle, for the truth. The time is now for watching closer, for watching the Hawks.
What'd you have for breakfast yesterday? Why would you pick those shoes? How fast is your Wi-Fi? What's your dog's name? Why'd you name him that? Now I've interviewed you too. Question more.
I'm Lee Camp. The corporate parasites in power today might think their control will continue forever. Whether they're right or wrong, we have to keep fighting. Question more.
Welcome back. Catching up with the corporate crime beat, Brazilian police reportedly are set to unveil the first formal criminal accusations in the case of the collapse of a mining waste dam created near the Vale Mining Company near the town of Brumadinho. Prosecutors would have to forward the accusations as formal charges, but more bundles of formal accusations by the police are expected in a long investigation. The collapse of the pile of water, soil, and toxic mining tailings at Brumadinho is believed to have killed at least 240 people. Multiple outlets now report that the charges against 8 to 12 individuals will center on alleged falsification of safety certificates by a paid safety auditor. Previous reporting by the Wall Street Journal in two major stories documented apparent awareness of the risks among Vale management and contractors, including direct, urgent warning by Vale workers. And India announced a ban on e-cigarettes on Wednesday, citing the need to prevent a health epidemic among younger citizens. The country's finance minister, Nirmala Sitharaman, said the executive order will ban the manufacturing, import, export, transport, sale, distribution, storage, and advertising of e-cigarette products in the country, adding, quote, its use has increased exponentially and has acquired epidemic proportions in developed countries, especially among youth and children. Violators of the new law could face up to a year in prison and or a fine of 100,000 rupees on the first offense, with up to 3 years in prison and a 500,000 rupee fine for additional infractions. It is not yet known if there will be a penalty for simple use of the products. In the U.S., the debate over e-cigarettes is still heating up. This week, it was reported that a seventh person has died from vaping-related lung illness. Individual states have also taken varying measures, including the state of New York, which banned flavored e-cigarettes. And while the vaping death reports certainly demand attention from U.S. public health officials, cigarettes, the nicotine delivery devices that vapes were supposed to displace, account for 480,000 deaths annually in the United States. India, for their part, is the world's second largest consumer of tobacco products, behind China. According to the World Health Organization, nearly 29% of Indian adults use tobacco. The WHO report also states that 1 million Indians die every year from tobacco use. And e-commerce giant Amazon has been accused of adjusting their product search results to feature listings of Amazon's own brands and products from other sellers that make the greatest contribution to Amazon's take. According to a report from the Wall Street Journal, Amazon optimized a secret algorithm to push products that are more profitable for the company in favor of more relevant or popular items. The Journal reports the move was internally contested by teams working on the project. More than 60% of purchases on Amazon come from the first page of search results, according to analytics firm JumpShot. With this type of drastic change in the algorithm, it could have a massive negative effect on those pushed off the first results page. Joining us now to break this all down is technology executive and best-selling author of The Driver in the Driverless Car, recently out in paperback, Alex Salkever. Welcome to the show, Alex.
Thanks for having me on. I appreciate it.
Now, first of all, just lay out for those of us non-experts, what is this algorithm? Why is it so important? And how is Amazon accused of monopolistically skewing the results here?
So anytime you type in a product search into Amazon, okay, you're talking to its algorithm. You're saying, I am looking for this. It's almost the same as Google. When it spits back results to you, its algorithm on the back end is saying, oh, this person types Nike Air Jordan sneakers, and it will send you back a list of results that it thinks matches most closely your query. In Amazon, there's literally hundreds of millions of products. So because of that, it can only send back a limited number of queries that'll fit on the first page. And in fact, on your phone or on your app, it'll be even smaller because the window's smaller. Now, why this is so controversial, which you alluded to in the opening statement, is because the first page results tend to disproportionately capture more of the clicks and buys.
And getting into the details of journals reporting, they say that one rejected proposal for altering it went even farther and was rejected by lawyers within Amazon as creating too much risk of antitrust issues. The change to the algorithm that was approved was rejected by Amazon's internal search team called A9 on the basis that they said it conflicted with the company's own stated principle of what is doing what is best for the company. So I understand this legal standard and this internal corporate standard are not identical, but does that statement by Amazon's own employees that they thought the customer was not well served create a significant additional legal risks for Amazon in terms of building an antitrust case?
So I'm not an attorney. First one, I'd caution that. I think, though, that admission internally implies that the team that's building search is worried that the best interests of the customer, which is the essence of antitrust cases, are not necessarily being served if the algorithm is skewed too heavily. Now, let's be clear. There are skewed algorithms or skewed choice all over the economy. Anytime you walk into a grocery store, people pay, or companies pay, what are called stocking fees to get on the first shelf or the top shelf. So it's not like this is an unheard of practice. It's about trying to strike a balance. And in particular, because Amazon owns such a large percentage of online searches for products, by some estimates 50% of first product searches land on Amazon, people worry, or the company worries, and maybe the U.S. government worries, that this constitutes antitrust. And I can tell you for sure that authorities in Europe are watching this very closely. They've already gone after Google for what they allege were similar behaviors in its maps and in its search results.
Right, and you know, you're very apt to note the context here of the U.S. and Europe diverging on exactly how we should regulate big tech, but doesn't on that point, doesn't the mystery around this key element of the Amazon apparatus, the search algorithm, doesn't that secrecy starkly illuminate just how unregulated big tech and online commerce are? We saw some definite awakening of interest in the U.S. Congress on search engines, and European regulators are obviously gearing up to take that issue on and have a regulatory reckoning with big tech. And it's becoming obviously as well a White House versus Europe conflict. But how does this latest report play out into that tangled transatlantic fight over profits and power?
So I think this latest report, as it gets digested on the other side of the pond in Europe, will become more fodder for antitrust activities over there. I think Amazon is wise to be considering this internally and start to think about the implications of what's happening. In terms of the secrecy of the algorithm, I don't necessarily see that as the issue because Google's algorithm is secret. Almost all these companies, when they have search algorithms or Facebook's algorithms, those are secret. They're considered trade secrets. So they're not going to publish them. They're not going to let the public know how they work. But if they disperse results which are really skewed one way or the other, then yes, they're going to come under antitrust scrutiny. Now, I would also say that under GDPR, which is the European data law, data protection regulation, companies are mandated to be able to explain algorithms in clear terms if they are questioned by users or by authorities. So this may force Amazon or Google or others to give more clear or more transparent explanations of exactly how they are making these type of selections.
Interesting. And getting specific here, aside from the algorithm, there's also the issue of Amazon competing with their own vendors with their own branded products. Is it possible that any regulatory crackdown could go as far as making Amazon get out of this so-called private label business of their own branded products?
I think that's a much harder one to push. I think it's possible, but around that, for example, you don't see supermarkets being forced to get out of the private label product lines. In fact, they're growing them. Walmart, which is one of the largest retailers in the U.S., could be viewed as Amazon-like in terms of its market share. It has a lot of private label things. And it also squeezes its vendors. So I'm not as concerned about that for Amazon. I see some of the ways that they've behaved as sometimes a bit of bait and switch, or sometimes maybe it's really tough on the vendors. On the other hand, it's very different than serving up search results to consumers which may not at all reflect the best interests of the consumers themselves.
Right, so you're saying they may very well be able to stay in the private label business, but they'll probably have to tweak the algorithm.
Yes, I think much more of the question is separating search from commerce, if it's possible to do that, because in Walmart, you don't have search, right? People walk into a store, they want to buy something, and there's private label products.
Right, and
but
you see
search
it there.
really limits,
Yeah.
sorry?
And you see it there physically.
And you see it there physically, that's right. Search, you don't know what you don't know. And even more so, as we move into voice platforms like Alexa, the number of search results returned to you will probably go down. And so in that case, the top results, there may be 3 results, become even more valuable and more clickable.
Yeah, a brave new world. Alex Salkever, author of Driver in the Driverless Car, just out on paperback. Thanks for joining us.
Thank you.
And turning from Amazon's e-commerce business to their streaming service, Amazon Studios has announced that they will shoot their new Lord of the Rings television show in New Zealand. The country was also the setting for Middle-earth in Peter Jackson's epic Lord of the Rings movie trilogy, which was released from 2001 to 2003. The TV show is expected to be the most expensive ever produced, with the budget to be more than $1 billion. New Zealand is hoping the program will boost their economy once again, as filming of this nature creates jobs, and the initial films greatly boosted tourism to the country. The series is expected to follow the characters of the films prior to the events featured in the movies. The production was eyeing the beautiful countryside of Scotland for the series, but reports of uncertainty over Brexit caused the studio to decide to stick with New Zealand. And that's it for this time. You can always catch Boom Bust on DirecTV, Channel 321, Dish Network, Channel 280, or streaming 24/7 on Pluto TV, the free TV app, Channel 279, or at youtube.com/BoomBustRT. See you next time.